All righty. And it is cold out here. Tuesday, December 9th, 2025. And although we had a down day yesterday, it didn't feel like anything extravagant. And we really didn't get much movement. Once we kind of fell and went down, pretty much stayed down most of the day. Surprisingly, though, the Russell actually had the best day out of everything. And this morning we continue to chop. And so there's a lot of waiting going on. I think we barely did a million contracts on the SPOOs. I think it was just barely over. I mean, at 3:30 we were still under a million cars. So and that's kind of the state of the game. And as far as movers, and shakers, there really wasn't anything that particularly moved, outside of the main stream. You had, I think, a number of the AI types of stocks had some movement, but again, you can see here, Marvel got hit pretty hard. I was going to step into something there since that got hit so hard, but then I went over and looked at the volatility in here, and the volatility in here has just absolutely disappeared. It completely disappeared. And quite candidly, folks, I mean, unless you're just going to get directional on something like this, and to me, these stocks are really difficult to get completely directional because you can see how they trade. They rip up and down pretty much every day. And to get completely directional in here, I don't think is really the play. This is my opinion. And so I decided to back off of it and not do anything with it. If the volatility does grow in here again, I'll be more than happy, because we've done a couple of trades here. I've done a couple of trades here on it in the last month or so, and they've all been really good trades doing volatility plays. So I'm not going to try and think I have it figured out, that I know which way it's going. I'm not going to short it. I'm not going to go long. I'm just going to sit on the sidelines. But it is in the wheelhouse now as something that I'm going to trade and continue to follow. And so that's kind of what's going on with Marvel. Okay, and so that is kind of the story there. It's bad out there. Let's face it. It's very boring. There's really not. I'll bring the ES up just so you kind of get a snapshot of what's going on. You can see when you drill out, we are really getting some just, intraday, it is setting up to where there is a couple of times a day. I'm not gonna lie. There are times when a couple times a day that it is setting up for some trades, but they're not going to be bangers, folks. They're going to be, quite straight with you. They're going to be nothing more than either bunts or little singles that you're literally trying to grind out by beating the throw to first base. I mean, you're not getting like a real classic single or double in these markets. You're really just getting, those 15, 20 tickers, and you just need to be happy with that and then move on. You're not getting, you're not getting these big bangers that we've seen just a month ago or even a week or so ago. It's just not there. I mean, price action's just not. And so when that happens, you just sit tight. Don't try and force anything. There's really nothing on here that looks particularly interesting other than what's already stated. Again, I think S3 is a good spot, 6803. I think S2, any of these, because we haven't really moved through any of these areas over the last week or so with any kind of authority, all the pivots are in play. And so I would say if you're looking for trades, that's where you'd best to be to look for, price action. And just stay out of the danger zones, which the danger zones are where we are now. Like when we open, when we just kind of chop, just wait for your time, wait for your moment, and take it. Same thing with the Russell. The Russell yesterday was kind of the best performer overall. I believe it's actually presented the better opportunities out of all the indexes, not just because it's been performing better, but I think the price action has been better. You can see here just the way it's moved. You've actually been able to capture some pretty significant moves if you caught it right. Much more so than the ES or the NASDAQ. Let's see. As far as today, I kind of like R1, 25, 40, 30. But I think R2 is going to be the spot to really watch. To me, that's probably the best setup today is in the Russell at 25, 46, 90. Because we have a number of touches up there over the last couple of days, including last week, and we could not get through there. As far as the downside, S3, 250180. I don't know if I would be willing to take S2 today, 251250. So I'm not even going to mark that one up. And that is about the size of it. I would stay away from the middle. And I would trade that, trade the edges, so to speak. I will put up the NASDAQ because I had said that probably come the new year I may start dabbling in some NASDAQ. Still have this marked from a while ago, 25,879.50. And if I were looking for a spot, I would look up there. S1 looks a little interesting only because there's been a number of touches down here. Right? We had a touch back here on the 5th on Friday. Rally. Just yesterday, we came down, touched S1, rallied, we're kind of chopping around. I don't know if third time's a charm or not. I definitely eye that spot. I don't know if I'd be willing to go in on something on a third touch in basically 3 days. but I'll mark it because I do like S2 25 51 13 25 5 13 50. And again, that's it. Not looking out much past that. On a stretch, if we do kind of get a little ugly, S3 looks pretty ripe here because again, here's some other spots. Touch and fail, and rally. Down here back on the 3rd, Wednesday the 3rd, and then Tuesday the 2nd. But that's kind of too far. I don't want to just go. I can mark it today just for the hell of it. I don't think I would take anything depending on how we got down there. But that spot looks ripe as well. But I'm not looking to look out that far. I'm looking to stay within that range, S2, R2 type of stuff. And that's about it. Nothing really else cooking. I've been looking through, many of these. These are what I consider big tech. These are just kind of the big tech names that I normally focus on. I continue to be bearish on Netflix. I still think that's going to be a good bearish play going forward. Now that we actually have Paramount, now there's actually like a bidding war going on with Time Warner, which ultimately is going to happen, in my opinion, is they're just going to wind up splitting that company up. Netflix is going to get a piece. Paramount's going to get a piece, and I think that'll make everybody happy. Because then no one company will own everything. Who knows? It's all bullshit. No matter who buys it and buys what, it's never going to be good for the consumer. So, it just creates two bigger monolithic giants that have even more control over everything. But hey, it is what it is. But I continue to be bearish on Netflix. Quite a number of these big names took decent haircut yesterday, with Google being the most prominent. Google's been on one hell of a run here, and a little chink in the armor. He even used that term, but hey, that's is what it is. But a little chink in the armor here for Google yesterday. Backing off, and I don't know if it was newsworthy or just exhaustion, because it has had such a big run. It's kind of due for a little bit of a whooping. It looks like it's off again a little bit today. I'm not sold on Google. I know, it seems like for me to say that, I could probably garner a ton of hate, but I'm not sold on the whole, Google's Gemini and Google's new AI and blah, blah, blah. To me, it just sounds like just another, another financial news marketing campaign that now a bunch of other people have just jumped on. And I quite honestly think that maybe the steam ran out of that story. And that underneath the covers, I think deep down inside, everyone realizes all right, although Google's technology may be better than everyone else's right now, it ain't that much better to where it's going to make it go up another, $100 in stock price. Let's face it. This whole industry right now is one big game of liar's poker, And although I do think it is probably the biggest industry type of thing to hit here in the United States, probably since the advent of the internet, I think it is that big. I think the problem is that because of social media and the media, that it's getting overhyped to a point where, look, there's no doubt a bubble. I don't know if the bubble is as big as everyone is perceiving it to be. I think the challenge is there's no one really out there to challenge the claims, because I firmly believe this industry is so new, this whole AI, which is, look, AI basically is something that's been around for a long, long time, because we've had machine learning and data science, and that all now has got lumped in with what AI is. So now AI isn't just about MLMs. It's about all the other stuff that's been around for decades, for that matter, and that comes to machine learning, data science, analytics, all that stuff. And they've lumped this and piled it all in, and now to create this AI kind of sector. And so what I think the problem is that there's just not enough people who are experts, and it's literally an industry where if you know 5% more than the next person, you're considered an expert. Problem is that 5% more that you know is infantile to what the industry actually will become. And because of that, there's nobody who's really like an expert yet, because we really don't know what an expert is. We only know you're an expert because you know or happen to be involved with 5% or 10% more than the next person we thought was an expert. And then when you boil it down, you say to yourself, well, gee, you only been doing this for what, a year or 2 or 3? And you're an expert now because you've been doing it for 2 or 3 years? Like, really? And that's what the problem is, folks. And so I think that's what's kind of coming to light a little bit here, maybe with Google too. I wouldn't short it because volatility in here sucks. And I wouldn't really want to, I really wouldn't want to stand on the wrong side of these, because it seems like the explosive nature of these is much stronger to the upside. But then again, I'm not willing to add to my long positions, because I think we're going to go through a pretty decent phase of stagnation with all these names. Meaning that, anything tech related with AI, AMD, Apple, to a lesser extent, IBM, Microsoft, Meta, these names, Micron. And I think you're going to see the price action reflect that. And that's a lot of what's going on, because like even Micron, right? It went through that whole coming to Jesus moment, got hammered, but then yesterday it's up $9. Why was it up $9? You go and look at the news cycle, or look, there was really nothing there that would tell me that, why it's up $9. Now there's a million talking heads that'll be out there and say, oh, well, it's because, what? Shut up. You don't know. You don't know. And I don't know, and I'm not going to claim to know. But what I do know is that for something like a Micron here, volatility is really good in here still, which I was quite surprised. Which brings me to my position. I have a position in Micron. I am basically delta neutral. I think my position is maybe skewed a little bit to the upside, but I'm in December, and anybody willing to kind of take a shot here in December, I think it's worth it. I mean, even though there's only 10 days left in December, there is an enormous amount of volatility, and I don't have my pointer, so hold on. Hold still. What good am I without my I have to have my pointer, man. That's like my shtick, man. Even if I only use it once. But the volatility in here in Micron, which brought me, that whole speech brought me to Micron, right? That whole bullshit story that I just spewed. Anyway, just kidding. Realistically, in Micron here, there is an enormous amount of volatility baked in here, especially in December. You're talking implied at 94%, looking at a $29 move. Right? $29 move up here in the corner. But there is an enormous amount of volatility in here. Now, the downside to this volatility is that, look, you could get eaten up because this stock moves. This sucker moves. When I sold this just a couple of days, I want to say last week I sold this thing. I was at a full one standard deviation way up when 265, 270, Micron was at or near like $200 when I sold those up there. And it's already at 246, 245, and it's pressing on those. But anyway, I was well aware of that. But needless to say, you can sell options in here and still take in a really, really nice premium on these even today, which I may actually add to this and do another little iron condor in here. Now you're not going to do strangles. At least I'm not going to do them because they're a little stiff. You're talking $2,000. That's just selling a put, a 205 put. But you're bringing in $2, and that's more than a one standard deviation. That's what that blue line is. Right? You're talking 12 deltas, so it's out there. And that's not to say, like, don't get disillusioned. This sucker moves. So 12 deltas is really not much in this stock because this MFer moves. And you can get taken out on one side or the other pretty quickly. So just be aware of that. And I'm well aware of it. Hey, look, if you're not living on the edge, man, like, you're not living. No risk, no reward. But even a 290 up here, so that is actually it's actually a little better than a one standard D strangle, right? It's actually outside one strike, actually two strikes on either side. 79% probability of profit. It's almost delta neutral. It's a little skewed, right? Little, not much. But look at the theta in this. The theta in here is just off the charts. And if you can handle it, and look, if you can handle the $2,000 or the $2,500 worth of buying power hit that you need to do, that you need to have to do this trade, this is a really, really attractive trade. And then bring in, I believe you're likely to be able to do this. You could probably throw this at $5.70 and leave it and lay it out there. And I believe you'll actually get filled. That is a really, really nice, attractive trade. Now, I, for one, don't want to lock up $2,500 in one trade. It's just, I already have a trade on. I have a number of other positions in Micron. I don't want to me, that would tip the boat for me on how much I normally like to allocate to any one given underlying or opportunity. So it's kind of out of my wheelhouse, but that wouldn't stop me. That would not stop me in the least bit in doing either a $5 wide iron condor or even a $10 wide, because I can still bring in over $1 on that, being this far outside with only 10 days. And the reality is, what I really only need in here is I really only need that volatility to maybe dip 5 to 10 points in the next 10 days, or have this thing literally fall between there in the next 10 days. To me, I'm willing to take that risk. Because look, if it does breach me one way or the other, then I just get mechanical. I roll my, if the calls are breached, I roll the calls out. If the puts are breached, I roll the puts out. If neither, I then just try and buy it back for whatever I can. Likely it'll be for a profit if it's between. And I really like this trade in here, even with only 10 days left in this thing. Because again, there is a really, and as compared, right? And let's just take another look as compared. So here's the 94 here's 94. Just going out to January, you can see it drops. Look at that implied. It drops 20 freaking points going out to January. So it doesn't pay. Again, even though the volatility is high there, to me, it doesn't pay to go out to January and lose those 20 points of volatility going out to January on something like this. It still pays to be in December. All right? That again, and here's another thing to be aware of. The downside to this is volatility will likely hang on in here at or near expiry. And why? And why, might you ask? And why? Because of this. Earnings. Earnings will come out after December expiry. So it's likely that volatility remains bid in here. So everything I talked about could just go out the window. Volatility never collapses, for one reason or another as we get to expiry. And, you got to eat the porridge, so to speak. So, again, these are all things just to consider when you're going into a trade like this. But nonetheless, nothing risked, nothing reward. But yeah, so those are some things just to be aware of. But I do like these trades in here. And then look, if you're thoroughly convinced one way or another, this is also a perfect stock to even do something like even maybe go outside the expected move. See, this brown line is the expected move. Just go slightly outside the expected move here and sell a put spread. I mean, to me, you're still bringing in almost 90 cents, $90. All right, you're risking 400. But you're still selling some volatility in here in December without doing like a double leg type of trade. And it's a pretty simple, straightforward one that I think a lot of folks could understand. I would refrain from buying options in here, especially in December, only again because of this. And then if you're really feeling cheeky, maybe do something on the call side. But I would not feel confident or comfortable just selling calls in here only because of the way this sucker moves. It's nice for me, it's nice in my opinion to have a little bit of that positive delta on the put side, selling puts and selling calls, so that if it does kind of rip your face off to the upside, you at least have something underneath there with some positive delta that will lighten the pain. All right, so man, did I just beat that one to death. But I think I gave you a lot of opportunity. And I still think, January is just not on the table yet until some of this volatility in December deflates a bit. And I think it may actually start deflating later on this week and maybe even after tomorrow, FOMC and all that. Hopefully it gets a little deflated. But I'm going to add to this today and do a little iron condor. And I'm likely going to stick to that one standard deviation, right? So follow that line. This line's very important when you are selling, because you want to be at or near that most of the time. In my opinion, if you want to give yourself at least the highest chance of making money. And that's that for Micron. MSTR, right? I'm still bearish on that. I'm going to continue to be bearish on that. I think even Bitcoin actually fell a little bit yesterday. I'm going to continue my bearish. One stock that I've actually, I'm a little on the fence with here is Mongo. I'll change gears a little bit. Mongo's had a Mongo-esque move here to the upside. I don't think it's quite taken out. It hasn't quite taken out its all-time record highs from back in 2024, which was somewhere in the $500 range. However, I think a lot of this may actually be a bit overdone. Now, it had another big, massive day yesterday and a big move. I was looking at possibly now, and look, full disclosure here with Mongo, I'm long. I have Mongo stock. I own it. I've owned it for a while. And I have no plans on selling it. This is just a short-term trade based on its price action, right? It's had some monstrous moves. At some point, some of these stocks tend to, have to pay back the bear, so to speak. And so one trade I was kind of tossing around. And again, you can't sell anything in here because the IV rank stinks. So you got to buy options, which kind of sucks. So what I was looking for in here in Mongo is I was possibly going to take a look at a calendar spread. Now, this is where things kind of suck. So I went in here and I was kind of playing around a bit, and I was like, you know what? If I was going to do a calendar spread, I would likely go around the 420, 410 area. And then I went and looked, and I was like, okay, not a lot of liquidity in here in February, so that sucks. And then I went in January, and I did the same thing, and I looked, and I was like, well, not really a lot of liquidity there as well. And so what do I do? I don't know. I really don't know. I would like to get short, but I'm really having trouble figuring out what it is to do. So then I was like, do I go out to March? Well, do I think it's going to really collapse that much out to March? I don't know. Maybe. So I was like, all right, so maybe there's more liquidity out here. No, not the case. So that was kind of like number two. I was like, all right, so there's two strikes, like why I shouldn't be doing something in here. And then I went and I was like, all right, so what if I did do, let's say I did like the 410. So I buy the 410 and I sell the 410. Right? Pretty much delta neutral. Pretty straightforward calendar spread. But then I'm like, buying power, $900. I'm like, I don't want to put that much. I'm not that confident where I want to throw throw $1,000 at this to be short. I'm like, I was looking for something cheap. But it just, wasn't happening. I'm like, this sucks. Like, now what do I do? And even if I did because there's no $5 wides, right? Everything, here's January, everything's $10. Right? Here's February, everything's $10. So maybe what I do is maybe I go into the weeklies. And I'm like, I starting to cringe a little bit. I'm like, I don't like weeklies. But the thing about the weeklies is that they're at least $5 wide. I'm like, okay. So that maybe isn't so bad. But then I went and looked, and I'm like, well, gee, man, there ain't nobody home at all. Look at this. There ain't nobody home. And that's the January 23rd weekly. Then I went up here to January 9th. And I'm like, all right, well, there's some people here. But again, $5 wide, not bad. Not bad, which means I can do something cheap in here. And I guess what my point is, folks, and the reason why I'm even bringing this up, is that sometimes, even though you may have like an idea to be able to do something, and you want to do a trade one way or the other, and get directional, and the underlying just really doesn't have the ability to have you do it in a way you want to do it. Meaning that, look, I can get short in this and I can do all these things, but I can't get short and keep it small in this. And so what it does is it kind of takes it off the table now. So now I really can't, now unless I'm really willing to do a weekly, which I don't really know if I want to, but I kind of feel like I think this thing is going to have I think this is going to have a pullback. I see this thing pulling back to $400. I have no choice. So if I really want to act on my convictions, I'm going to have to do something I don't normally like to do. But I have no choice. So I'm actually forced into doing a weekly because it's really the only place I can land and be in a space and a risk profile that suits me. And the reason I'm bringing this up is because I know a lot of folks have said, why don't you do the weeklies? And because I don't really like them, because a lot of times this is what the problem is. And it's not just this underlying, it's all of them. The interest in here is usually more short-term traders speculating. And so to me, they don't really reflect how the underlying works, because you have all these short-term speculation in here, and it's basically just gambling. And to me, when you're dealing with the weeklies a lot of times, and look, I know part of this is gambling, but when I do trades like this, I'm not looking to gamble. I'm looking to put my money in a place where I'm playing percentages. And I know these percentages, like even though this says probability of profit is 47%, that's completely skewed, because there's just not enough people in here participating in this for this even to be right. So anyway, I just wanted to point that out. And that's kind of one thing I kind of had going on in my head in Mongo. I want to get short. I really can't do it in a way that I'm comfortable with. So I may actually have to go and do some kind of weekly options, just because I'll have the strikes available to keep it a small trade, which that's what I was looking to spend. And that's usually what I'm usually looking to do most of the time when I'm looking to take a positional trade. I usually want to spend a couple of $100. Risk a couple hundred, make a couple hundred. Nothing that's going to blow my account up. All right. So anyway, stay tuned, because I may put something on there at some point, because I do think Mongo is due for a bit of, he had this huge run after earnings. They knocked it out of the park, blah, blah, blah. AI this, AI that, right? Great, wonderful. Their cloud business is doing great, wonderful, good for them. I'm like, that's awesome. Again, I own Mongo. I'm in the stock. I think that's great. But I think, again, short term, and then and what's brought me to that is that seeing all these others starting to kind of fall a little bit from grace, like the Googles, to a lesser extent, even the SanDisks and the Microns, even though they had good days yesterday. This too will have its day where there's a little bit of a reckoning. And let's face it, there is a bit of exhaustion running in the market right now with just about all these stocks in general. Meaning that, like, what more is the catalyst for them to continue to go up, right? There has to be catalysts other than the Federal Reserve and all this other stuff. There has to be some other, and I think that whole cycle is starting to run a little bit thin. We need some new news and new catalyst. So anyway, there you have it with Mongo there. And that's about it. And then as far as like other underlyings that I was looking at, I've kind of been sticking to, it's a pretty short list. It's these that you see here, and it's those big tech names. And I don't know, it's been weird, but I feel like, the last 4 months, haven't deviated much outside of the stuff that I have on my lists. And I've been very reluctant to add new stuff. And when I do, I usually drink Dos Equis. But when I do, I usually do decide to put something on. And then the latest and greatest, I think it was this IREN Limited, or IREN Limited. But even this, just in the last few days, volatility has a bit kind of collapsed. I mean, this thing was running hot in volatility just a week or so ago, and now we're at 47. I mean, so this has even kind of run its game low here. Now, look, 47 is not completely off the table, but it does definitely make it not very attractive, right? It's a lot less attractive at 47 IV than it was when it was 100 or 90. And that's kind of been what's happening with a lot of these AI, so to speak, plays, and which has also taken them off the table. So with that being said, I don't really have much of anything else. I'm going to be watching Oracle, obviously. Those earnings come out tomorrow. That's kind of like the big kahuna. As I said before, I'm not going to go over it again here. I think if you're going to play Oracle for earnings, your best bet is to stay in December, even though there's 10 days, because that's where you're getting the most volatility. Because if you look at volatility here in December, you're talking a 91 implied 20 and a $26 move versus go out to January and you're at 62. So almost a 30% difference going out to January. And so your best bet, again, if you're looking to get the most bang for your buck for earnings, is going to be to stick in December, but be fully aware that this one standard deviation move, which is right now between about 85, if you were to stick 85 and 255, it could easily blow either one of those out with no questions asked. So just be prepared for that. But that is really the only play in town when it comes to upcoming earnings, in my opinion. And then after that will be Broadcom, which I think they sucked all the volatility out of that one already, which that one might not even be on. I don't even see it on the list here anymore. It was on the list here. I think that's gone. So that's really the only game in town at this point for earnings. So I'm not even going to address that here. And so that's it. So trade tight. I think we're in for a very choppy, sloppy, low volume rest of the year. I think we might get some additional volume maybe later after this afternoon. and then tomorrow morning, and then obviously into FOMC. But then once I think that kind of passes, I think the bubble break. I don't mean the bubble meaning the market, but I think that bubble of uncertainty slash rate cut animosity kind of goes away. And then I think we get into full-blown holiday mode, where I think the opportunities are going to get even thinner and less attractive. But, hey, it's the nature of the beast. And so there you have it. Have a good day today, and I will be back tomorrow.